Hey, this is Sasha. Thanks for joining me in today's video. What I want to share with you today is a quick insight to our options membership and what it's all about. So this is a little clip put together, cut from different segments of the options membership class and session that we ran not too long ago. So again, it might be a day or so old, but I'll give you an insight on what the options membership is all about. Now, enjoy this clip. If you're interested in the options membership, go ahead and take a look at our website at tradersfly.com. You can go here and you can go to the membership section. That will link you up to our membership website. And once you're here, you can go ahead and take a look at the option ideas and strategies. And this is what it's all about. You'll get a sample clip right now, and you can also learn more insight right here. And there's also a couple of sample videos as well right there. Now, for watching this video, I will give you a little bonus and discount. And what you can do, I'll just show you right here. When you scroll down, if you're interested in signing up, you can type in the coupon code, share the love, do it all together, and you'll see apply the coupon code. It'll give you, I think it's a, 50% off the first month. So off the first month, you can get the first month half off, and then it'll renew. And if you're not interested, of course, you could just go ahead and cancel before that time is up. So that's a little bonus for those of you that are watching this video. Keep in mind, if you're watching this video 6 months later or a year later, the coupon code may not work. So understand that coupon codes do expire and they do change. And in that case, if it doesn't work, it doesn't work. So anyways, one other quick little bonus is remember that if you go to the Traders Fly website, go to the Getting Started page. There's also an Options Trading 101 for those of you completely brand new to options. Anyways, enjoy the clip. I think you'll get a lot out of it and seeing what our member section has to offer. In market conditions like this, it's interesting to say that, hey, I don't know where it's going to go, right? I don't know if it's going to go up. I don't know if it's going to go down. But when you're looking at this, you have to understand, where is the money coming from? Is the money coming from my theta, or is the money coming from a directional move? When you do longer term duration, let's say 30 plus days, you have a much more positive vega, meaning a bigger vega, either positive or negative, depending on if you do iron condors versus calendars and so on, or double diagonals. So when you look at this, one of the ways to narrow down your vega is to go shorter duration. So if I go from a 30 days to like a 14 days, it kills my vega in a way. So I did this with, let's see here. I think I did this with, here's W, just to show you an example. I got rid of these. So here you can see a butterfly trade, shorter duration. This is on Wayfair, and it's a 9-day trade. Why would I do a 9-day trade when the market's at all-time highs? Yes, you have the biggest price risk, but it means I don't have a lot of volatility risk. So I would shorten up my duration. That means I'm not in the trade long. I'm in the trade maybe 2-3 days, and then I'm out. So this is what you're doing, is maybe setting up a trade like this where your theta versus your vega is much stronger. So this theta is almost twice as strong as my vega, right? This is a negative vega. I could have done it with a calendar too, that's fine. But the point being is I have theta working in my favor. I did this also with, let's see, I think an Amazon example. Let me see, this is a, let's see if I do this right here. Here is Amazon with a 2 contract spread. I just put this one on today actually. So what you can see is this is also a 9-day duration. I put some of these on for today's lesson really just to show you that 9 days right here, I kind of went out to about a 9 and an 11 delta. So selling at 11 on the puts and selling here on the 14 on the calls, because, you know, I think we're already stretched, right? So I brought in the call side a little bit. And that gave me this. Now the market here pulled back about 14 and Amazon pulled back about 52. So those negative deltas initially did help me out. But you can see we're kind of right in the middle. The theta decay is very strong. We're looking at, again, 51 relative to a 37 vega. I'm not that concerned because I'll make this back with the theta very quickly. But you know, if it does keep pulling back, I do want to be careful. It is short vega. But it does work like a very, very fast theta. So that's the thing with shorter durations. It's not going to hurt me that bad when I have a vega move that goes against me. Now, could I go ahead and stack a longer term duration? Absolutely. But in this kind of condition, how would I go ahead and do that? Well, I would do something like, let's say I was doing a butterfly on Amazon, but I was doing kind of longer duration, or even an iron condor. Let's say I want to go 44 or 58 days and I wanted to do something non-directional. Well, I probably would want to position it with some extra negative delta, okay? With some extra negative delta. Why is that? Well, because if we get a pullback, that Vega is going to hurt me much, much more. So could I go ahead and do that? Could I do a short, can I do a short Vega trade in these kinds of conditions? Absolutely. It's just I might do them a little different. So what I would do, and let's just widen this out real quick, and just so we can see it, here, let's go to, this is 3100. Let's go wider. This is 3300. And we're gonna have to go even wider with Amazon. It's just such a big stock. That's not traded, so let's go here. Where is it traded at? Might have to go 200 points. Okay, that's fine as well. So what I would do in this case is bring this position more like this, a little bit to the left. And the whole point of that really is I'm looking at the deltas. I'm not looking at the expiration. I want a little negative deltas to compensate for my negative Vega. Now, even this on a stock like Amazon might not be enough. And you may say, why not? Well, because Amazon moves pretty quickly. So I might actually, in fact, need to go, let's see if this will work, something like this to compensate for it. Why? Because I got a lot of short Vega. So on the upside, I won't get hurt as bad. On the downside, I might need those negative deltas quite a bit, because if that volatility goes up on me, that's going to hurt me. So I'll need that extra room. Am I really worried that this line is a little, or this expiration is a little bit, you could see it's a little to the left of the current price? Not really, because I'm not worried about expiration. I'm worried about these Greeks. That's really what I'm watching. And the way I'm looking at the setup is really this white line. How is this white line, if I stretch it, going to move and behave? That's the key. That's what I'm looking at. So I could go ahead now and start tweaking this and say, okay, well, I'll move this. Let's see if I can. Maybe it won't let me just because with the strikes the way they are. But I could go ahead and move this whole thing maybe over. Let's see, October 16th. Where is it? Yeah, October 16th. My next one is like 3250. So 3250, I could just move this over to 3250. And then I'll have to move this to probably 3470, 3460 right here, and even further. Move this, and I'm now looking at the Greeks, so I'll probably need to move this even further like that. And I could be more a little at the money if you want, but I still want some of those negative deltas. So could you tweak it a little? Yeah, you could, and have a little less negative delta. What happens if you say, hey, I don't have a bit of those, I want some in between, like I don't have this or this to trade, but I want some in between. How do you tweak this position? Let's say you want a little more negative delta. Well, all you do is you just go here and you say, hey, well, I'll just buy an extra vertical put right here, and it's going to add a little bit of the negative delta for you, however much you do, depending on the spread. And you can see I can add an extra -2 right here. And now this gives me a nice profit picture with very little risk on the downside. All right, so thank you so much for joining me. I hope you enjoyed this video, quick clip, and some insights on what we do kind of in the members section of the options segment. Keep in mind, if you're brand new to just getting started, go check out the options trading start here section on our website at tradersfly.com, or you could go to the freebie section where you could go ahead and download quite a lot of other cheat sheets, worksheets, mini video courses, and things that I'm working on for you guys. And if you want to join us in the members area, go to the membership section right up here on the navigation bar. You'll be then taken to our members website, and that's where you can see the options, ideas and strategies membership plan, and you can get a big overview of what it's really all about as well with a video there. So thanks again for joining me. Remember to hit subscribe if you're brand new to the YouTube channel, or of course, go ahead and join the newsletter list by clicking the link right over here. And that way you get notified as we release other great videos, courses, products, books, and maybe even join us on our live video session from time to time. Thanks again, and I will see you next time.